Welcome friend. Today we will discuss about a important stock, and that is AQY Energy. AQY Energy Services Limited. AQY Energy Services Limited was incorporated as a public limited company under Companies Act 1956 by its certificate of incorporation on May 03, 2011, issued by Register of Companies, Gwalior, Madhya Pradesh. The company is world's largest carbon credit developer and supplier under the promotership. Mr. Manish Kumar Dabkara, he is the CEO. AQY Energy is a renewable energy company that is engaged in the development and operation of solar power plant. The company, formerly known as King International, is delivering a wide range of services in categories of training, consulting, energy conservation, carbon credit trading, CDM and electrical safety audit, carbon footprint measurement and management, and many more sustainability services. AQY has been working towards rehabilitating the planet to a future of net zero carbon emissions. Now the services. One is the carbon credit trading. Carbon credit trading is a kind of tradable permit that per United Nations standards equals 1 ton of carbon dioxide removed, reduced or sequestered from the atmosphere. So the carbon trading in India, it enables them to earn sellable certified emission reduction, that is CER credits, to meet Kyoto targets. Such projects have empowered India to qualify for voluntary carbon credits. However, the Indian carbon market is still a nascent stage. So come to the point, that is AQY Energy is services. One of them is carbon credit trading, another is carbon footprint measurement and management, CDM means clean development mechanism, electrical safety audit, rehabilitating the planet to a future of net zero carbon emissions. Next is improvement. Within just 1 year of being listed, the firm was able to secure a place on the main board of the SME platform on July 4, 2022. This stock once considered a multi-bagger in the stock market, with investors betting on the growth potentials of the renewable energy sector in India. The stock reached a record high of rupees 3,114.07 on January 21st, 2022, which was a substantial increase of over 12,000 from its share price of rupees 25.50 on the listing date, according to Bloomberg. On April 7, 2021, the SME IPO was listed on the exchange and managed to raise around 19 crores. Now the question is, why it is downfalling? The reason concerns raised by the new auditor have raised doubt about the company's financial health and its ability to meet its growth targets. Analysts said, as of now, the stock is down by nearly 80% from the record high, and it is expected to remain under pressure until AQY Energy addresses the concern raised by its auditor in a satisfactory manner. AQY Energy tumbles over 40% in 3 sessions after auditor raises concerns. Now the auditor's reports. In the December quarter, the company's net profit dropped by 76.3% to rupees 38.09 crores, while revenue decreases 40.9% to rupees 406.57 crore. 1 year return was minus 75%. In the wake of a negative auditor's report and a disappointing performance in the December 2022 quarter 3, this stock was plummeted by over 40% over the past 3 trading sessions. This steep decline has dealt a major blow to investors who were once bullish on the company's prospects. Now the auditor's report. The auditor in its report stated that there were material weaknesses. Material weaknesses is a deficiency or a combination of deficiency in internal control over financial reporting, such that there is a reasonable possibility that a material misstatement of the company's annual or interim financial statement will not be prevented or detected on a timely basis. So the auditor in its report stated that there were material weaknesses in the company's internal financial controls and raised concern about the accuracy and completeness of its financial statements. Next, the material weakness is a deficiency or a combination of deficiency in internal control over financial reporting, such that there is a reasonable possibility that a material misstatement of the company's annual or interim financial statement will not be prevented or detected on a timely basis. Just for example, material weaknesses is just like suppose 100 million overstatement in revenue would be a material misstatement for a company generating sales of 500 million annually. Incorrect company valuation as a result of the material weakness may affect the company's stock prices. So few more discrepancies. According to the report, AK Energy had incorrectly classified certain expenses as assets, which had the effect of overstating the company's profit. The auditor also expressed fears about the company's ability to continue as a going concern. So this is another very important point, that the auditor expressed fears about the company's ability to continue as a going concern, noting that it had incurred losses in the past and had negative net worth as of March 31st, 2021. That means in 2021 is already calculated as a negative impact, but company window dressed and shows positive values. Next, a low cash conversion ratio. This is another important point. A low CCR or cash conversion ratio is concerning for companies' funding needs, but also because it could suggest that a company is concealing poor underlying performances. This is because cash flows are often affected by poor performance before profits. The firm is losing money. A negative CCR means that it takes you longer to pay your inventory and collect your money, which de facto implies that your suppliers finance your operations. Basically, cash conversion ratio is calculated through operating cash flow divided by EBITDA. Basically, when the cash conversion ratio is becoming low, the company is face a poor performance and unable to pay the suppliers, others. That means ultimately the cash flow statement is losing the money. So next point is another point, with only 10% of the company's net profit being realized in cash, has also raised concern about the company's ability to manage its working capital. More remarks. Director has lack of expertise in accounting and financial statements. They are CS, means company secretariat, not chartered accountant. Moreover, absence of an audit report from the financial statements, means financial statements there was few, audit report was not there. Last one is bad latest Q3 result. Latest Q3 results of AK Energy have raised serious questions about the company's accounting practices, financial reporting and working capital management. In the December quarter, the company net profit dropped 76.3% to rupees 38.09 crores, while revenue decreased 40.9% to rupees 406.57 crore. Now the fundamental of AK Energy. Now we will understand some fundamental of AK Energy and see where it is now present. So market capitalization 1565 crores, P is 3.42, excellent. Book value is 222, fine. ROC is 236 and ROE is 176, so more than excellent. Face value is 10, 52 week high is 2964, 52 week low is 569. Present current market price is 569. 6 months return is minus 67, 1 year return is minus 75, but if you compare it maximum return, that is from April 2021, it is 1304%. Next, the advantages. Company has reduced debt and number 2, delivered good profit growth, CAGR 358% last 5 years, and good ROE track record of last 3 years, ROE 171%. Next is the disadvantages. Net profit quarterly decreases from 96 crore to 38 crore. Next is operating profit quarter from 130 to 47 crores. Expenses increase 320 crores to 360 crores. Now the company clarify all the points what the auditor blamed or auditor reported. First of all, it has recognized only the transaction price received for project deployment as its revenue in the current period. That means they are saying that the amount is calculated as per the transactions prices, but not the how much revenue it can be corrected. So the assessment is not correct. And second, it clarified that future revenue for the issuances of verified carbon units or VCUs will be accounted for in the future as per relevant accounting standards. That means the future revenue calculation is not taken part. That means verified carbon units are not calculated with that balance sheet. Company also clarify even if the company follows the auditor's opinion, it will only result in the deferment of revenue recognition and will not impact the overall revenue and profitability of the company in the long run. That means in long run, the company's calculation, that means future calculation or the values which can be deferred revenues are not calculated presently. Moreover, the company is working with senior advocates and professionals to amend the contractual clauses with the customers to ensure that the essence of the contract is properly reflected in the contract to the satisfaction of the statutory auditors. They plan to share relevant information and updates with stakeholders from time to time. The management of EKI Energy, Mr. Manish Kumar Dabkara, the chairman and MD, is truly an expert in the field of carbon markets. Being an entrepreneur and starting from scratches, he has been instrumental in establishing EKI Energy Services Limited as one of the world's largest carbon credit suppliers. His vision and strategic decisions taken at times of adversity are commendable. Next, the other key executive, Mr. Mohit Agarwal, CFO. The company already given bonus on July 4, 2022, ratio 3:1. And the clients of EKI is NTPC, NHPC, Indian Oil Corporation, Indian Railways, SB Energy, the World Bank and the Fortum. The promoters and holding total number of shares is 22 crore 74 lakh 96,000. That's 100%. Promoters holding is 73.44%. FIS holding is 5.43%. DI is holding 5.73%, and the others is 21.13%. So promoters presently holding the position, as a clarification from is not present, so it is better to hold the position rather than selling. Cash conversion cycle low for the company, and a low CCC indicates you are doing well at converting inventory to cash and shows your business operating efficiently. While nothing has proven illegal, it is imperative for the company to address this concern and provide clarity to its investors. Hence, a clarification from the management side would not only help to clarify those doubts, but also would act as a confidence booster for investors. But until then, it remains a mystery which remains unsolved, and as we know, markets hates uncertainty, and hence we are seeing this stock falling like a pack of cards. I think, as my own personal view, the company has potential to move and again prove to be a multi-bigger. Thank you for watching my videos. Please like and subscribe.